The purpose of this video is to explain what we're doing with the Jurik RSX Dyna indicator inserted into Trading Alchemy's ultimate divergence indicator. The results that we're getting are astounding. I'm going to explain this first of all on a 3-second chart. The date being displayed is Tuesday, December the 19th, 2023. 3-minute chart, Mountain Standard Time. The RSX Dyna is a Jurik function, and we've just retooled it so it displays the way we want it to. It's an oscillator. The RSX Dyna is like an RSI, but it's much smoother, although you can adjust the Dyna setting and it can become very choppy, and in some cases that's good depending on why you're using it. So we have two RSX Dynas in the subgraph 3, one with a length of 10, the other with a length of 50. And the Dyna setting is either 0.1 or 0.01. The smaller the Dyna setting, the smoother is going to be the results. If you increase the Dyna setting to something over a factor of 1, it's going to get real noisy, but that can be good depending on why you're using it. So for example, I'll just go in here now, I'll change that setting. You'll see how noisy this gets. Okay. And you can get it even much noisier than that. But what it is effectively doing is helping you to identify the divergence. Subgraph 2 uses an Arun indicator set to 25. Now, again, we've retooled this. We call it the TSC, but it's essentially an Arun indicator, which is available on the TradeStation platform. Divergence on the Arun is real interesting. It's easy to spot, but the ultimate opportunity to enter the trade lags based upon the hook, which takes place much later. But what we noticed about the TSC, the maximum read when it's set to 25, it goes up to a maximum of 96. It never goes any higher than 96. But frequently, the divergence will show up, as it does here. After it hits its maximum, it takes a dip, and then it comes back up to a lower high. You see the same thing happening on the RSX Dyna. It hits a maximum read, in this case, of 99, and then the divergence, which occurs over here, is lower. So you're at a higher high, lower high on the indicator, both on the TSC and on the RSX. And we love the RSX because it pivots right away. So what we've done is we've taken the Jurik function, if you will, and we've placed it inside the Trading Alchemy ultimate divergence indicator. Now, to explain what I mean by that, I'm going to show you the easy language code for Jurik. So again, we've retooled some of this, but the bottom line of it is this. We've got to take all of the essential aspects of the calculation of the RSX and transform it into one line of code, which turns out to be right here. All right. So that particular line of code, we copy and we paste it into the, let's get it up here. We're going to take that line of code and we paste it into this particular line here. So now the ultimate divergence indicator is going to use the Jurik function as the basis for determining its divergence. We're not going to use any of the standard oscillators. We're going to use the Jurik. And you can use any custom indicator if you can if you can get it to know how to emulate it. And that may take a little bit of experimentation, but in any case, that's what we've done. And now we're going to use that for generating the divergence signals. What we also have on this workspace are different open high-low close sessions from the current and the previous day. Those are our horizontal lines on the workspace. Now we can turn these off very easily just to explain what we're doing here, but I'm just going to leave them on. I think you can understand what we're doing. But let's just one more time review divergence. So using the RSX, what we want to look for is a lower high for a entry on a short trade, a higher low on a long trade. So once it hits its max, like it does down here, you see how it moves up, comes back down, and is divergent right in here. You can see the higher low here. And here on the TSC, you don't quite have this maxing out at the bottom. It did that way over here. And you can see how it hit its maximum here, came up and back down to a higher low right in there. And there was your initial long trade at the open today. The RSX did the same thing right there, generating that particular cross, which is an entry. And the way we've got this set up, we've got several different types of divergence that we're plotting here. Anytime you see a cross, that's based upon a divergence that we may potentially want to use for an entry. These signals, if you will appear one bar after the pivot. So in other words, that cross appeared at the close of the following bar. And we can set it up that way at any interval, 5 seconds, 100 tick, whatever the case is. We'll show you the results of that in a minute. So coming to the point, this entry here is based upon the internal settings of the ultimate divergence indicator. It's using a faster setting than what we have displayed on the screen. But what we're going to use for making our determination of whether or not to take the trade is what we have on the screen. So I'm not going to take that trade because this hasn't reached its maximum. I'm going to take that trade because this has. We've hit our maximum here. Now we're divergent. You can see it on the TSC as well as the RSX. This I'm going to take because I'm divergent on the RSX Dyna. I'm not going to take any of this because I'm not divergent. Now I might take that, come to think of it, I might take that because we're divergent here. This is hit at max. We're not quite there. This is already at a max. So that's kind of questionable. But as you come down to this point, we don't have a signal, but you can see we are divergent between this low and this low. And then once we get up to the high here at the close of the day, you've hit a maximum over here, you're at a lower high here, you know you're divergent, so you're out. And you can easily see the divergence there on the RSX. It's just that simple. So we're going to use the indicators we have displayed on the screen for determining whether or not we should take the trade that is showing up using slightly faster settings in the ultimate divergence indicator. Now let's just take this forward. We'll show you Wednesday. This is all the overnight market. Nice divergent pattern here compared to here. Lower high, easy to see. All right, so this is, we're going into the open, 7:30 open, Mountain Standard Time. Easily seen divergence. Max is out at the bottom here. Here's your divergent pattern, but we don't have a signal. Not on a 3-minute chart. We've got it on faster charts, but I'm just using this to explain the principles that we're using. We have a signal here as well as here. Now on the TSC, that signal would not be taken. But based on the RSX, you can see it's the major divergence that's going on here. Now to get back into the trade, we have to use a slightly different form of divergence. And we're going to use reverse divergence. That's what is the nomenclature used for trading alchemy. This is hidden positive divergence. We've got a lower low on the indicator, but a higher low on the smooths. So we could take that entry right there, or we could get in over here. And then when we ride it up to the high, the 3-minute TSC doesn't really show the divergence here, but you can see it very easily on the RSX. Okay, and this keeps you in the trade all the way until down here. One whale of a drop this afternoon from a high at 48.30 to a low, which I don't think we've hit it yet. But this was a 70-point drop and no false signal. That's pretty nice. Okay, now let's explore this in more detail. I'm now going to switch this over to a, we'll take it to a 500 tick chart and show you the results. And you'll be able to see how fast this, how fast this calculates. Now it's running all these calculations on there are 4 different divergence indicators on this particular workspace. And we're going back 3 days. So understandably, it takes just a little bit of time to generate all these signals. But keep in mind, the signal, the live signal appears 1 bar after the pivot. So let's go back to the open. So there's our entry right before the open. Then we've got another long signal right right before the open here, right after the open here. Now, we have numerous opportunities to enter a trade based on the fast setting of the divergence. But as we mentioned, we're not going to take those. We're waiting for this kind of a pattern to emerge on the TSC. That lower high right here or right there. Now, as it turns out, we don't get much of a drop. And so we wind up having to re-enter the long trade based upon reverse divergence showing up in the blue cross right in here. We get more divergence up here, and you can see a very clear divergence between this high and this high, higher high on the SPOO's lower high here. Same is true on the RSX. You have a similar situation emerging right in here. There we go. That's a reverse divergent signal here. Again, right in here. You don't find the indicator on the screen in this case. Well, you could use this one, the RSX. That's a lower low here. And then we find good divergence right in here on the TSC. And again, here. Now you're not getting the full move, but this is the pattern that you're looking for. You're looking for this major divergence showing up. Now, depending upon where you're expecting this market to go, we may decide not to take those trades because we anticipate that the market's going to go higher. And this is barely an hour into the morning as of yet. So we haven't even established the initial balances yet. But once we have, and we would have right in here, and with that moving up higher, we can expect that we'll probably go even higher. But we do have clear divergence in here, but there's your long signal again. More divergence down here. And now we're running back into the initial, well, this was the high from a previous day, and we kind of ricochet off that bottom. This indicates a nice low right in here. You've got some divergence as well developing on the RSX. So that's what generated that long signal. Okay. This low compared to this low. Look at the TSC. Much considerable divergence right in here. And that signal will appear immediately after the close of the following bar. But you can see it, okay? You can see it very clearly. Okay? And over here, that divergence, this top, this high compared to this, big divergence, same appears on the RSX. Very cool. All right, so I mentioned that there are four different kinds of divergence that we're working with using the ultimate divergence indicator from Trading Alchemy. It's a great indicator. Regular divergence with two different settings here. And these again are using the Jurik RSX Dyna. One has a length of 40, the other has a length of 10. And the RSX, the dyna setting, is either set up to be at a factor of, pull it up here, of 7. Okay, you remember what I said earlier about the noisiness? 7 is really noisy, but it identifies divergence very well. 10 and 0.1 is much smoother, but it's very effective. So that's your regular divergence. Then we have reverse divergence as well, using a setting of 10 and 0.1. And then, again, that reverse divergence is what's generating the maroon or the magenta crosses or the light blue crosses. That's reverse divergence. And you're going to use reverse divergence to enter late into a trend. Better be sure you know what the trend is. So from this low, for example, the indicator is moving up. So any of these are opportunities for an entry. But once the trend is down, if you've hit this high divergence here, now the indicator is coming down, so are the SPOOs. There's your reverse divergence. You're going to take those short trades if you haven't already gotten in. You're going to ignore the long trades because that's not the trend. Okay? Now, the other thing that they've built in to their indicator is something called reverse opposite divergence. This is a little tricky. And so let me explain it, but let me show you where we're going to put this particular type of divergence. Now, the easiest way to understand this, the reverse divergence pivots are displayed in these round dots on the screen. Now, green is bullish, yellow is bearish, but this is what we refer to, or he refers to, as reverse opposite divergence. Reverse opposite divergence occurs when the bullish signal occurs toward the top of the move, or the bearish signal appears at the bottom of the move. Of course, you need to have an understanding of where that top or bottom might be. The indicator alone won't show you that. But if you just look at the screen here, for example, here's your top. Look at the RSX Dyna. This is the top. There's your divergence. So this dot here was indicating a bearish sentiment because the pivot is occurring, the bullish pivot is occurring at the top of the move. So that's indicating a bearish sentiment. So once you got that signal, this already confirmed that was what you could have been expecting. Now, here you come down to a low,